Hi everyone. So I'm here with Andrei Polga, who's written a book. Sorry, Andrei, would you mind introducing yourself? I've just forgotten the name of your book.
Thanks, and first of all, really glad to be on. Thanks for having me, Haroon. The book is called The Age of Anomaly. The exact title is The Age of Anomaly: Spotting Financial Storms in the Sea of Uncertainty. And it's basically a book I've written to help people do two simple things. Actually, not that simple, but in my book, I try to make them simple. One, keep their eyes open and become better at, if possible, spotting the next financial crisis as early on as possible so that they can position themselves accordingly. And two, of course, having the humility it takes to realizing that you might not be able to do that. So even I frequently tell people that the next financial crisis might catch me by surprise as well. So I spend just as much time and energy in my book teaching people how to become more financially resilient in general, so that in the end, no matter what life tends to occasionally throw our way, we're going to be far better positioned to withstand that than let's say the average individual.
Okay, that's great. So let's just dial back a little bit. First, let's start off with who Andrei is and why you decided to write this book.
Some people know me, actually, most people on YouTube know me from my 1 Minute Economics YouTube channel. And it basically just started as a hobby, as me saying that I'm not really happy with the way economics is being taught. Like economists have this huge flaw. We love hearing ourselves speak and we love sounding intelligent. And that's a problem because it makes to the average person, it ends up seeming that economics is this really complicated thing that they're never going to be able to wrap their heads around. And on 1 Minute Economics, I kind of tried to do the opposite. I tried to tell people, look, from simple stuff like inflation, deflation, supply and demand, to complicated things like derivatives, fractional reserve banking, understanding how the world around us works, these things aren't that complicated. Instead, if they're properly taught to you, then even a minute, which is why I've chosen this concept, can be more than enough for you to learn how this works, how that works. Basically, this is my value proposition to people. I tell them, look, there's no hiding from economics because we make financial choices, we make economic choices, whether or not we realize it. Even if we don't do anything, it still kind of ends up being an economic choice, the choice of not doing anything, and there will be consequences associated with that choice. So I tell people, when something like a financial crisis comes, or generally speaking in life, there's just no hiding from economics. So it's in your best interest to at least master the basics. But at the same time, I understand that people have lives, people have families. So I'm not here to monopolize their day. I'm not here to tell them, hey, spend 2 hours each day watching my videos and I'm going to teach you economics. No, I'm here to tell them, look, spend 1 minute of your time watching my videos, and I promise that in that 1 minute, I'm going to explain something that's important related to economics and help you understand it forever. So that's kind of why I've decided to start 1 Minute Economics. It comes from my intention of giving people the best, not the best bang for their buck because it's free, but the best bang for their time, the best I possibly can.
So coming back to your book, why did you decide to write this book? What makes you feel that now is like a time that your book's really important for people to read?
Well, I have had a disturbing sense of urgency associated with this book, more so than with other projects of mine, because I do see all of these bubbles all around us. I do see all of these anomalies all around us. And the thing is, it's not each individual anomaly that bothers me. It's the fact that each of them represents a symptom of a bigger problem. And in my book, I try to explain to people that I'm not afraid that, okay, the stock market or the real estate market is going to crash by 60%. Like, as someone who studies and actually even trades crypto every now and then, I'm used to even extreme levels of volatility. So it's not a market crash per se that I'm afraid of. I'm afraid of something different. Because up until this point, if we take a step back and look at the dot-com bubble, at the Great Recession, up until this point, we have had deflationary events like market crashes, and each time the narrative has been that central banks and governments have it all under control and they're here to save the day, right? Like after the dot-com bubble, interest rates were lowered from 6.5% all the way to 1%, and the economy was jump started. The narrative was that, hey, look, the authorities saved the day. But this saving of the day came at a cost, and this access to easy money facilitated an even bigger bubble, the real estate bubble, which, as we know, crashed in 2007 to 2008. And once again, the authorities came to the rescue, but this time, the market demanded more. It was no longer enough to lower interest rates to just 1%. They had to lower them all the way to zero and pump 85 billion each and every month at the height of QE in the US, for example, into the system. So essentially, it's quite remarkable that in 1 year they pumped 1 trillion into the system, in light of the fact that from 1913, when the Federal Reserve appeared, the central bank of the United States, up until the Great Recession, so in almost 100 years, the monetary base had reached a mere 850 billion. So essentially, in 1 year, they pumped more into the system than had accumulated after almost 100 years. This is what I try to tell people. Because, okay, obviously, financial crashes are a cyclical thing. So we're going to have one again. The market's going to crash, people are going to panic, people are going to be afraid, and the authorities are going to come and say, don't worry, we have it under control, we're here to save the day. The problem is that eventually, and this is what I'm afraid of, eventually the market will say that enough is enough. The market is going to say that I no longer trust the ability of governments and central banks to save the day. And the problem is that we are at a very tricky juncture because, on the one hand, the market will demand an even bigger dose of stimulus. Like, just like with the Great Recession, it wasn't enough to just lower interest rates to 1%. The market wanted more. After the next crash, the market will demand even more than last time. So what are they going to do? What are they going to do in the United States, for example? Well, they might choose to lower interest rates to negative 1%. They might choose to pump 3.5 billion into the trillion per year into the system instead of 1 trillion. The problem is that this cannot go on forever. And eventually, in my opinion, as I try to articulate it in the book, sooner rather than later, the market will say, wait a second, I no longer trust this. Enough is enough. I'm not buying this. I'm not taking this medicine any longer. And when that happens, and it does tend to happen every now and then throughout history, as I also explain in the 3rd chapter of my book, where I analyze the anomalies of the past, what tends to happen after that is a big reset, as I choose to call it, or a big rebalancing. And unfortunately, and this is what led me to writing this book, and this is why I'm investing so much energy in promoting the book and being all over YouTube and telling people about my message, the problem is that after such big reset situations, the average person is usually on the losing end of the deal. And through videos like the one we're recording right now, I'm just trying to basically do my best to help as many people as possible prepare themselves properly for what I think is coming.
Okay, so you mentioned chapter 3 in your book, and you mentioned some of the past anomalies that happened. Can you speak about any one in particular that may portend to the time that we're in right now, or is it totally new?
Well, I like to tell people about history that, repeat something that someone else says. History doesn't necessarily repeat itself, but it rhymes. So you don't analyze history with the intention of saying, okay, this happened 300 years ago, so now it's going to happen the exact same way. No. Like in my book, in chapter 3, I've covered various anomalies from the past, from the tulip mania, which peaked in 1636 to 1637, which is the first documented asset bubble. And moving on to more modern day events like even the dot-com bubble, the Great Recession, even lesser known ones like the short domain mania of 2015 to 2016. And all of these, I've analyzed them not because I think that by analyzing the past, we will be able to predict the future, because humans are pretty terrible at that. Instead, what I try to tell people is that history gives us a glimpse into who we are. You don't study history, economic history in our case, to predict the future. You study it to understand human nature better, to understand what humans do, how our decisions lead to anomalies. Like, for example, in the case of the tulip mania, how it leads to certain types of tulip bulbs being worth more than a home, or how our behavior can lead to excesses, how these excesses then lead to crashes, and how in the end we have to pick up the pieces and start over, have big reset situations or whatever. So I this is why I'm pushing people to really study the past. And in my book I do my best to explain these things in a very conversational manner. It's not going to be like reading a PhD thesis or anything like that. It's not going to be like having an arrogant economics professor talk to you from his ivory tower. It's kind of like having a friend talk to you and say, look, here's what happened in the Dutch Republic. Here's what happened in Germany. Here's what happened in various other situations. These are the parallels we can draw. These are the conclusions we can draw. And here is what we've learned about human nature. And it's precisely that knowledge about human nature that I feel people are going to be able to put to very good use in preparing for the next financial crash and any other future anomalies that they're going to be subjected to.
So you mentioned the QE and you mentioned the stimulus and dropping of interest rates. What other things that are happening currently do you feel that people should watch out for or know more about?
Yeah. Well, on the one hand, of course, there is this huge problem, as you've mentioned, that we have an economy that's dependent on cheap money, on economic stimulus, and so on. So there you have it. There's one potential pocket for turbulence. On the other hand, we are looking all around us internationally, and we see developments which, historically speaking, have led to lots of things and none of them good. I'm talking about things ranging from currency wars, which started a good couple of years ago, countries trying to deliberately weaken their currency so as to boost exports, and then currency wars, which end up leading to protectionist policies, which is what we're seeing right now. It should terrify anyone who has even touched a history book to see just how much attention these protectionist policies are getting nowadays. You have, of course, the tariffs that are being imposed by the United States. Then you have Italy, where a coalition between two parties that each in its own way has somewhat of a protectionist agenda has won the elections. So whether we're talking about the European Union, whether we're talking about the United States, whether we're talking about China's retaliation to the tariffs imposed by the United States, which is going to lead to the most momentous trade war that I know. It's going to be the biggest trade war in history. These things should terrify people. So on the one hand, we have the monetary and central banking dimension of it, quantitative easing, stimulus on which the economy got hooked. Then we have the geopolitics of it. So obviously, currency wars, trade wars, and the ramifications of that. It's just, how can we say, every now and then, humans get crazy. Like, we have this perfect storm, this perfect storm that's not just something specific to the United States or something specific to China or Europe. There's this perfect storm of events, this perfect, quote unquote, perfect, and by perfect I mean awful, combination of events and circumstances, which is kind of like a powder keg. It's hard for me to say exactly, what the spark is going to be that's going to make everything blow up, As I mentioned in my book and in my appearances and in my videos on YouTube, I'm not a person who claims he can always predict the future or, unlike other economists, I actually embrace my competence. I make this incompetence a core pillar of my strategy. And I tell people all the time, look, don't try to predict the future. Just look around you, figure out what exactly it is that should be worrying us, and try to become more resilient. In the end, this is what I'm here to help people do.
Okay, great. So how do we become more resilient?
Well, fortunately, it's not something that has to involve rocket science. And in fact, people need to understand that those of us who are listening right now, if instead of just closing their browser tab after this video and not doing anything, if instead of that, they just choose to, maybe they're going to pick up my book, maybe they're going to subscribe to 1 Minute Economics, maybe they're just going to Google stuff about the financial system, as long as they decide to do at least something, they're going to be in much better shape than most individuals. Like even in the United States, we have studies like the Bankrate one in 2015, which show that the average family in the United States wouldn't be able to even withstand an unexpected expense like $500 or $1,000 as a medical emergency or something like that. So people are in far, far worse shape than we realize. So essentially, being resilient doesn't really involve rocket science if you look at the overall landscape. Instead, just like I do on YouTube, through my book, I try to give people a logical perspective. Like I'm not going to spoon feed them conclusions. I'm not going to say everyone should now invest in real estate. No. Because what if you live in a politically unstable country? If you invest everything you have in real estate and live in a politically unstable country, then you're only one potential regime change away from losing it all. So I tell people, I'm not here to spoon feed you. I'm not here to think on your behalf. You should not outsource that. Instead, what I do toward the end of my book especially is take things one asset class at a time and try to help people figure out if that asset is a good choice for them, and if so, just how much they should allocate in terms of net worth and whatnot. I choose to have two main categories of assets. On the one hand, I have status quo assets, assets that everyone knows about, like stocks, like real estate, and so on. And on the other hand, I have what I call trailblazer assets, which are newer assets, assets which are riskier but also have higher potential returns, like domain names, cryptocurrencies. I'm actually one of the few economists out there who specialize in these exotic assets. For each asset type, I have then explained what the subtypes are. Like, for example, when it comes to status quo assets, the popular assets, you have assets like stocks, which perform good when the economy is doing well, when people are optimistic or whatever. Then you have, I call them life jacket assets, or assets that people buy to hedge, to protect themselves. A good example would be precious metals. And then, of course, you have assets for which there's not necessarily a solid correlation sentiment-wise. The same thing for the other category. So I just take each asset one at a time, I analyze them in detail, and do my best to kind of help people put together their own strategy. This, like, it's not rocket science. It's not, I'm not one of these people who say, oh, just buy my books and I'm going to make all of your problems go away. No, I'm not. I'm just going to do my best to teach you how to think for yourself and how to put together your own strategy so that you can land on your feet after a big reset that I envision and which will be anything but pleasant to deal with.
Okay, so earlier on in the conversation, you mentioned that you not only own cryptocurrencies, but you also create cryptocurrencies. Do you mean that you are a developer and you developed your own cryptos, or are
No,
you a
no, no,
miner?
no, no, no. I actually mostly focus on Bitcoin. So when it comes to Bitcoin, there are two dimensions to what I do. On the one hand, there's my cold storage that I just hang on to, and on the other hand, I occasionally do a bit of leveraged trading as well. But other people trade a wide range of altcoins. That's their prerogative. But personally, I just focus on BTC.
Okay, and in your book, you mentioned in a few places about borrowing money to invest in different asset classes. Can you speak a little bit about that?
Yeah. Well, what I can say is that in my books, in both of my books, I preach to people about how important it is to have sustainability in what you're doing. Like I'm here to help people put together a strategy they can build on forever and ever. So with that in mind, I'm not the guy who's going to recommend leverage trading. Now, of course, as someone who does money related stuff for a living, as someone who studies things like crypto in detail, then yes, I do occasionally engage in leverage trading. But, and I make this distinction very clear, if you are not a professional, if you don't know what you're doing, if you don't spend enough time doing it to be confident that you're genuinely good at it, then you're better off just staying away from leverage. Stay away from leverage. put together a solid strategy, stick to it, accumulate, and you'll be in much, much better shape than the average individual. If you develop a passion for the markets, if you say, no, 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 trading is a good option for me, it's a good option for someone with my personality, then by all means, engage in it. Choose whichever leverage you consider appropriate, but just understand the risky nature of the thing you're doing.
Well, interesting you mentioned that because my business is to help leverage traders like navigate the markets better. So could you just, I wasn't planning on speaking to you about this, but since you brought this up, could you just speak a little bit more about your own experiences with leverage trading, please, just so that my normal readers and followers could understand another person's experience?
Well, I mean, just like when investing in crypto, for example, when engaging in leverage trading, you need to understand what you're getting yourself into, because of course, on the one hand, you're controlling a much more robust position, and this enables you, of course, if you get it right, to make exponentially more than what you would without leverage. At the same time, however, it's far easier you can even get liquidated. For example, if you're 10x long in Bitcoin, to give you an example of a highly volatile market, if you just buy and hold or occasionally sell, but you do it without leverage, then you can never be wiped out. You can just hold it indefinitely. Whereas when it comes to leverage trading, I have yet to meet a successful trader who was never wiped out, who never got his position liquidated. I got my position liquidated, and essentially it's a it's a very high degree of risk that you have to accept, because there's no such thing as investing in something or doing something without there being cons involved. Do I occasionally do it? Yes. Like, for example, right now I have a leveraged 12-point-X long in BTC from it was 2 orders with an average of just below 6K, and I'm still holding that. I'm still holding on to that order right now, and it's doing well. But that's an example of an order that did well for me. I also had situations where I was liquidated. So again, if I were to name just the number one trait of successful traders who engage in leverage trading, it would be humility. Understanding that you're doing something risky, that you need to have proper risk management, and generally speaking, it's something, if you don't know what you're doing, don't do it. You can trade demo accounts. There are all sorts of baby steps you can take until you're confident enough in your ability to meaningfully trade with leverage. But if you are indeed ready, if you're in the right mental state to do it, and if you have your money management in order, then by all means, go for it.
Okay, well, thanks for that one there. It's very useful for my normal listeners and readers. Now, back to the rest of us. Are there any scenarios that you have in your head that could happen with the perilous financial situation?
Sorry, you're referring to what I think will happen next?
Exactly. What do you think could happen next?
Well, the main problem, the elephant in the room, the way I see it, is that, of course, especially people who live in developed countries, they say, oh, no, no, no. In a democracy, everything is so robust. We have these different institutions which safeguard one against the other, and it's such a robust system and all that and all that. But what I'm afraid of is that people will end up realizing that that the fiber that holds society together is a lot thinner than they realize. So again, I'm going to refer, of course, to my big reset scenario, in which we have an exogenous deflationary shock, like, for example, a market crash. Then the authorities step in to, quote unquote, save the day, but the market rejects their measures. This is a problem, because people in that situation would lose confidence in the status quo. What is the status quo? Well, the status quo means that people would lose confidence in the banking system. It also means that people would lose confidence in currencies. And whenever such a deadly mix of circumstances occurs, whenever that happens, frankly, it's impossible to predict what the market will choose next. Now, of course, the top economists all over the world, and the people employed by various big institutions, they have contingency plans. Like, for example, one plan would be, if people lose confidence in currencies, generally speaking, would be to try to replace the current monetary system with a monetary system that revolves around um, drawing rights issued by the IMF, you know. So that would be one option. Of course, people have planned for it, people have made all sorts of calculations, but it doesn't mean that the market is going to accept that. In the end, it's there is a great deal of randomness when it comes to what happens when people lose confidence. Will they accept, for example, the IMF's SDR approach and just say, okay, perfect, this is the new monetary system, we're going to accept it? Maybe. But what if they don't? So this is why the biggest thing I push in my books, on my YouTube channel, and generally speaking, is that you need to have the humility it takes to understand that some things are just beyond the predictable. They're beyond the predictable. You have to understand that every now and then, it's a generational thing, it happens, just human nature, every now and then, things will get so bad, economically speaking, and that we're going to be in a position where nobody's going to be able to predict what happens next. Which is why I dedicate just as much energy as I do teaching people how to prepare for the next financial crisis. I dedicate just as much energy to helping them become more resilient in general. Do I have a strategy that enables you to get filthy rich no matter what happens? No, I don't. However, if you set your goals a little bit lower and instead just end up being happy enough with a strategy that enables you to land on your feet, I think that yes, that is achievable.
Book that's coming out. When it's coming out, where can people buy it?
Just like my YouTube channel, I mean, I write books and I teach people economics on YouTube from a position of relative financial security. So in the end, just like just like I'm talking to you guys right now, I tell people what I think they need to know. I don't tell people what they want to hear. And essentially, with my new book, to enable as many people as possible to gain access to the book, I'm going to reduce the price to just 99 cents. It's going to be just 99 cents if you buy it as of today and until Sunday. The regular price is something like $10 or so. So basically, by reducing the price for a week, I'm going to make it really, really accessible to pretty much anyone. And of course, if any of you guys end up seeing this video after my big promo week is over, maybe you're in a bad financial situation, maybe you cannot afford the book, So basically, if you want the book but cannot afford it, again, maybe because you're going to see the video a bit later, maybe because you just are not able to buy it for another reason, then I've set up an email address called friends@ageofanomaly.com that maybe you can put in the video's description. And if you guys want to read my book but cannot afford it, or for any other reason cannot go to one of the stores where it's available and buy it, send me an email and I'll do my best to hook you up with a free copy. Okay? I just want to make sure that people who want to read my book are going to be able to read it. And for those who can afford to buy it, again, it's just 99 cents. It's practically free. You can find it by just searching for its title, The Age of Anomaly, on Amazon, on Barnes & Noble, on iBooks, which is Apple's app, and also on Kobo. The same way, you can head over to ageofanomaly.com and you're going to find links to all of the places where you can buy the book on my website. And also this week I'm organizing a contest over at my YouTube channel with some really great prizes, and I basically do stuff like reward people for tweeting about the book, for promoting it, and things like that. So if you want to check out the contest, you can head over to youtube.com/1 minute economics, and maybe you're going to want to join. There are lots of prizes, so the likelihood of winning is pretty high.
Awesome. Sounds fantastic. Thank you so much, Andre.
Thank you, guys. And, I really hope you're going to find my book useful. I really hope you're going to like the things I'm trying to do on the internet, from writing books to publishing videos on YouTube. My only request is this. If you like my work, if you like my book, if you like my YouTube channel, don't hesitate to occasionally maybe write a fake Facebook post about it, because you know how it is. A lot of people say, yeah, I like your work, but I don't have many friends on Facebook. What good would it do if I share it? Any bit of extra exposure counts, whether we're talking about Haroon's channel or One Minute Economics or any other project of that nature. So guys, if you like our work, don't hesitate to spread the word.
I like your work already, Andre, and I think it's fantastic what you're
Thanks a lot.
doing. I enjoyed
Thanks a
reading
lot.
your book, and I hope lots of my followers and readers will get it too.
Same here, my friend. Same here. Like I wish I could come to you guys with a far more optimistic message, but unfortunately, I really am terrified of what's coming. So terrified, in fact, that I'm practically making it my number one objective in life at this point to kind of spread the word about it and get people to at least think about the things I'm saying.
Great. We look forward to lots more people understanding what's happening in the financial markets, Andre.
Perfect. Thanks for having me on and have a great day, guys.